Welcome back. And right now we are going to discuss the USA ADP non-farm employment change, which will be out in about already 10 minutes from now. And I hope that Michael does join me very soon, because he's going to hold the second part of the data release as always. As concerns the fundamentals, let me find, here it comes. So as you can see on my screen, at the current moment the forecast stands at 190,000, while the prior figure was at 105,000. And if we talk a little bit more about the history of the indicator, I would like to remind you that the U.S. private employment added 205,000 jobs in January, following the 267,000 in December, according to the ADP report. The strong dollar and sluggish global demand weighed on manufacturers and weakened growth in the first 3 months of 2016. Economists expected a 193,000 job addition in January. Private hiring declined slower than in December amid a slowdown at the largest companies. And also at the current moment, the February report on the private payrolls from Research Institute ADP should show an increase of 190,000 jobs in February, slightly down from the previous number, as you all may know. Let's move on here. Different experts and economists and other analysts from different banks and institutions, according to their views, there is a Bloomberg survey summary, as always, where the median estimate stands at 190,000, average estimate 189.16,000. High estimate is 237,000, low estimate is 160K, and the total number of estimates has reached 45 this time. And let's take a look also at a couple of quotes. For example, research team at TD Securities suggests that today's session Fed's Beige Book and ADP employment data will be utmost important for the investors. And they say that the Fed Beige Book is at 1400 ET ahead of the March 16th FOMC meeting, and they will look to the details of the report for quantitative evidence that the U.S. economy has stumbled since January meeting, which would take pressure off the FOMC for action in the March meeting. And they estimate the ADP employment to be eyed ahead of the Friday's payrolls, and they look for 165,000 just, which is below the estimate, of course. What's more? Nothing regarding the quotes. And finally, the Dukascopy community member sentiment, where traders went rather bullish on the US dollar versus the Japanese yen, was 58.82% bullish votes versus the 41.18 bearish ones. And since I have just a couple of seconds left, I would like to mention one of the comments. Basically, they're all more or less bullish. Well, Sharpson says that ADP non-farm employment number will get a first idea about the NFP on Friday, and he's right. Jobs market in the U.S. is strong, especially the ADP non-farm employment change report shows no weakness. So he supposes that the 185,000 estimates are too conservative, and the ADP will be over this number. So that's basically it on the fundamentals. So Michael, if you are ready, you are more than welcome to proceed with the technicals.
Thank you, Kate. Hello, everyone. So for today's data release, we have the euro-dollar currency pair. Well, I've chosen euro-dollar. We have the positive surprise trading strategy, expecting the non-farm payrolls data to be better than the forecast. Thus, we have the sell market, expecting the euro-dollar to go down. The sentiment for the given pair is somewhat bullish at 54.52%, with the euro being sold in only 46.25% of all cases, and the US dollar being bought in 50.96% of all cases. So not the best percentages, but nonetheless. If we look at the penny orders, both in the 50 and 100 pip range, the majority is to sell the euro. In the 50 pip range, it's 56.79%, and in the 100 pip range, it's 57.33%. Other market participants have different perspectives towards the euro-dollar. Orlando has a sentiment really close to neutral, but with bears slightly outnumbering the bulls. The sentiment is 59.97%. Saxo Group has a bearish sentiment of 56.12%, and the daily FX has a bullish one of 55%. So if we move to the market reaction table, where we see the reactions for the previous 5 date releases of the ADP employment change. For the euro-dollar, the smallest one was only 10 pips, and the highest one was 35 pips. And also we can see that the data mostly, well, not mostly, but in all of the previous 5 releases, surprised with better than expected figures. So there's a good chance we'll see a better result today as well. So based on these reactions, we can calculate the average one, which is approximately 20 pips, and this is the reaction we could expect today. So based on this reaction, we set the take profit and stop loss levels accordingly, with the take stop loss level located currently at 1.0875, and unfortunately there is no other significant level close by. And the take profit level is located at 1.0835, so right on top of the 4-hour S2 and the daily S1, bolstering this support line. So in case the data is better than expected, we will most likely see the initial reaction reach this area, perhaps even breach it if price manages to move lower by the time the data is actually released. And yeah, finally, what I would like to mention is the technical indicators, which are mostly giving bearish signals, with the only bullish one being in the weekly time frame. But that is not important for us right now. The most important one is the 10-minute and 30-minute time frame indicator, or mostly the 10-minute one, because it was updated 10 minutes ago specifically for the date release. It's giving us distinctly bearish signals, so also suggesting that the pair will go down. But the 30-minute time frame suggests that price will eventually go up and remain flat from the initial reaction. And we have like 40 seconds to go. I would like to mention some of the Bloomberg survey forecasts of the top forecasters, such as the BMO Capital Markets. They expect the data to fall in line with expectation, meaning that the non-farm employment change will be 190,000. Commerzbank expects the data to be 200,000, so better than expected. Bank of the West expects a 198,000 reading, and the only one of the most important banks is the Bank of America Merrill Lynch. They actually expect the data to be worse, so that expected to fall to 180,000. So we should have the data posted any second now, and yeah, we already see a reaction to the downside, so I'm guessing the data is slightly better, or maybe not just slightly, but significantly better. And yeah, we do see that the data is significantly better, 214,000, and the initial reaction unfortunately is only 15 pips, but I reckon it will still go to the downside and reach the take profit level eventually. Unfortunately, the reactions lately are smaller and smaller, so I'm hoping that in the near future they will be more fundamental data dependent. And that will be all from my side. Back to you, Kate.
Thanks a lot, Michael. So guys, once again, the ADP employment change came out at 214,000 versus the forecasted 190,000, which is better than expected, of course. See, the reaction is still swinging there, so you can observe it on Michael's screen or on your own anyway. So for now, we are saying bye to you. Thanks for staying with us. Thanks for tuning in. Right now, we will have to pass the floor to Doc and Jignesh for them to proceed with their webinar on Fun with Flags. So please, guys, go ahead.